Hey traders, today in this video, I'm going to talk briefly about the long butterfly trade, but more specifically how to set up the symmetrical long butterfly and why we trade it on 0DTE. First off, these trades are very flexible, low risk, high reward, and are great in this high volatility market. Most 0DTE traders focus on selling credit spreads. That's always been the traditional approach, which can be a very high probability trade, although the risk-reward profile is not very attractive, where your losses with proper risk management are 2 to 3 times your winners. Now, I think there's a time and a place to sell volatility, and I've most certainly found success selling 0DTE credit spreads. I'm not bashing this method at all. Rather, I want to introduce a different strategy, one that has been growing in popularity among 0DTE traders, and one you should consider adding to your tool belt. What is a long butterfly? A long butterfly refers to an option strategy that combines bull and bear spreads with a fixed risk and cap profit. These spreads are made up of 4 options at 3 different strike prices, with the maximum profit realized if the underlying asset closes at the short strike at option expiration. One major reason as to why butterflies are so attractive for option traders is because it is a very low-cost strategy to gain directional exposure. In addition, there's a lot of flexibility and allows one to easily adapt to changing market conditions. Not to mention, the risk-reward profile is very attractive, also flexible, ranging from 1 to 5 or even as high as 1 to 15 risk-reward, depending how the trade is structured. Let's take a look at an example. On screen is the call side of an option chain for the SPX W. The W stands for weekly, marking them as short-term SPX options. Weekly options are now available 5 days a week, and we trade these on the day of option expiration, making them 0DTE. Now, in this example, let's assume the SPX is trading for 37.60, and the trader expects a move higher to 3,800 into the close. In this case, they would look to enter a bullish butterfly spread by selling 2 contracts at 3,800, buying 1 contract at 37.85, and buying 1 contract at 38.15, making this a 15 wide butterfly centered around 3,800. To break down the strategy further, we're going to buy to open 1 SPX 37.85 call for $810, sell to open 2 SPX 3,800 calls and receive $920, and buy to open 1 SPX 38.15 call for $265. The maximum loss is the net debit paid, in this case $155. There are 2 possible outcomes in which a loss of this amount is realized. If the stock price is trading below the lowest strike price at option expiration, in this case $37.85, then all the calls expire worthless. Or if the stock price is trading above the highest long strike at expiration, in this case $38.15, then all the calls expire in the money and the butterfly position has a net value of 0. In other words, the profit zone is in between the 2 long strikes, with the maximum profit realized if the underlying asset is equal to the short strike price at expiration. In this example, to realize maximum profit, we want the SPX to close at 3,800. To determine the max profit potential, take the strike width less the net debit. In this example, our maximum profit potential is $1,345. To recap, this is a very low risk, high reward trade where we are risking $155 for the potential to make $1,345, giving this trade a 1 to 8 risk reward ratio. Our trading community trades this strategy every day of the week, among other 0DTE strategies. And what we do at 0DTE Traders is every morning prior to the market open, we send out a forecast report to all of our members within our private Discord community, laying out potential butterfly trade ideas for the day. In addition, we provide an update feed throughout the day to help guide decision making for this particular strategy. Here was our forecast report for July 29th, 2022. I did not handpick this, rather this was just a report from the last trading day, but this is what you can expect. some unique market insights, and a minimum of 2 potential trade ideas, a pin high and a pin low. In this case, on this particular day, we closed within 43 cents to our pin high, with many of our traders taking this with returns from 400 to 1500%. So low risk, high reward potential with probability of profit somewhere between 50 to 70%. That is really dependent on how you manage the position. As for pinning probability, I recommend you go through our past reports. They are uploaded on our website at the end of every week, and then you can see for yourself how accurate we have been thus far. If you want to try us out, you can visit our website at 0dtetraders.com or see the direct link in the description. We do offer a 7-day trial. For premium members, we have over 20 educational lessons to teach this strategy in depth, as well as other 0DTE strategies, and even a process for determining direction, as well as for timing entries and exits. So check it out and hope to see you soon.